Hey guys, it's Bradley with the Insurance Guys Podcast. Before we get started on this week's episode, I want to give a quick testimonial for this week's sponsor, and that is CoverWallet. CoverWallet for agents provides a single point of entry to access 9 separate commercial carriers, including Chubb, Liberty Mutual, Hiscox, and Guard for thousands of classes of businesses. Guys, if you're looking for the solution that keeps you from having to enter in thousands of accord forms or thousands of entries to accord forms that really hangs up your day, I know I hate that. CoverWallet literally changed my life when I discovered them and their innovative platform. Agents are also able to service customers online through CoverWallet and receive a bindable quote for products including general liability, BOP, workers' comp, professional liability, and more. And I got to tell you guys a story. I had a client that I was moving over from another carrier. It was a $30,000 professional liability policy. And we were literally about to lose the deal. We were literally going to tell the client to stay with the current carrier. We could not do anything with it. We were just having a really tough time with one of our other brokers. And I thought, what the heck? And this was right after we got signed up with CoverWallet. I thought, what the heck? We'll try it through CoverWallet. And I literally had the client's number pulled up in my phone and was about to call them and tell them they needed to stick with the $30,000 quote from my competition. Ran it through CoverWallet. CoverWallet was able to provide a policy through an amazing carrier at $11,000, and we increased this client's coverage. Guys, they literally saved my day. And I'll tell you something else that they do really good. CoverWallet does sell direct to consumer, okay? But what they do is the leads that they are not able to sell direct to consumer, they push to their agents. So our office is able to go in every morning and we've got literally hundreds of leads that we can work and call and work from. And a buddy of mine, Aaron Robertson, sold, I think, an $80,000 commercial trucking policy off a one-call close off of a lead that CoverWallet pushed him. So guys, if you sign up through the Insurance Guys, CoverWallet's actually going to give you some free leads that you normally would not get through them. Normally you have to bind a few policies before they give you the leads. They're actually going to go ahead and give you the leads if you sign up with the Insurance Guys today. Check out coverwallet.com/insurance guys. That's the coverwallet.com/insurance guys, or check them out in the show notes. If you need any help with that, please let me know. Thanks, guys. Before we get started on this week's episode with Tom Hegna, I wanted to kind of give you a backstory. So Scott and I were in Vegas to do the episode and speak at the Keystone Insurance Conference alongside Tracy Cotton, which you heard last week on episode 113. Or I happened to notice that Tom Hegna, who was one of the first episodes we did and a personal hero of mine, Tom Hegna was in Vegas speaking at another conference. So like everything else, so much business can be accomplished in the Facebook or Instagram DMs. Sent him a DM, said, hey, Tom, you don't remember us, but you were on our show 2 or 3 years ago. We're in Vegas too. We'd really like to do a live podcast. Sends me a message right back. It's like, hey guys, really would love to do that. Come to this hotel at this time. So we shot this podcast with Tom in a closet inside the Planet Hollywood Hotel in Las Vegas, Nevada. Not a closet in Tom's room, a closet next to a conference room, like a broom closet. And that does not diminish the quality, does not diminish the absolute gold that Tom drops for you guys increasing your life insurance sales. So really hope you enjoy this episode. Do me a favor, if you got some value out of this, reach out to Tom, tell him you heard him on the Insurance Guys podcast and that you really liked the episode. Thanks.
Insurance agents from around the world, welcome to the Insurance Guys podcast. My name is Scott Howell, your fearless host and leader, insurance agency owner and insurance evangelist for I Protect Insurance and Financial Services, based out of Huntsville, Alabama. And before we get started on today's episode, please help me welcome. He is a 6'3" sophomore from Saraland, Alabama, Parade First Team All-American, Rivals 5-star recruit. He is a fantastic insurance agent and the agency owner of Portal Insurance. Ladies and gentlemen, please put your hands together and welcome my friend, Mr. Bradley Flowers. How are you, Bradley?
Great, Scott. How are you today?
I'm the best I've ever been.
Good.
I'm telling you something. Sitting in a room right now with a guy that by all accounts may be the number one guy in the United States of America for retirement income planning. That's a pretty good day in my book.
It's a good day.
So, guys, we are excited and blessed to have somebody on the show today. And I want to respect your time today. I know it's very, very busy. but we've got somebody on the show today that we had to get back on the show.
Yep.
Because the one thing that Bradley and I hear the most about our podcast is people are starved to hear more information about life insurance, retirement, planning, how to be a better agent. So, ladies and gentlemen, we brought the man back on the show. This is the second time he's been on our podcast. He's an economist, an author, a retirement expert. He's been an incredibly popular industry speaker for many years and is considered by many to be the retirement income expert. Ladies and gentlemen, it is my profound honor to introduce to you for the second time on the Insurance Guys podcast, Mr. Tom Hegna.
Hey, thanks guys for having me on.
Man,
Absolutely.
Thank you so much for being here. I don't even know where to get started, so I'm just going to start. Instead of us going back into DeLorean and talking about how you've gotten into the industry and working up to today, we've already covered that. I want to talk a little bit today, and I know Bradley wanted to talk a little bit today about a couple of different things. Number one that Bradley said he wanted to talk about was you've gotten into retirement planning and insurance sales, and you want to start going after the big whale, the guy or girl, the man or woman who, everybody wants to get that person. So talk to our agents, our P&C agents and our life and health agents who are starved for information about how to do stuff like this. How do they get started in that?
Well, a couple of things. If you want to work with the whales, you got to swim with the whales, right?
Absolutely.
So you got to work with business owners, farmers, ranchers. I mean, those are the people who've got the money.
Right.
Some people work with movie stars. Some people work with pro athletes. But if you want to do the big cases, you got to get in the markets where the big cases are. Mm-hmm. And then, but you can also realize that the average person is so far underinsured that if you really covered the average person properly, they need millions of dollars of life insurance. And see, people don't understand this. They've heard, well, you need 7 times your income or 10 times your income in life insurance. Well, that worked when interest rates were 10%.
Right.
Interest rates are 1%. And in a 1% interest rate environment, it takes $5 million just to protect $50,000 of income. Mm. Now, how many people do you know that are walking around with $50,000 of income that have $5 million of life insurance? And how many people do you know that make $200,000, $300,000, $400,000 that are walking around with 20, 30, 40, 50 million? And you say, well, that's ridiculous. Okay, well, what if interest rates were 5%? They're not, but what if they were? It would take $1 million for every $50,000 of income. So if you think about it, if you're working with somebody who's making $200,000 or $250,000, they really need $5 million worth of life insurance. Right. But they don't think like that.
Right.
And I tell the story, if you want, I'll tell you the little story of this widow in Arizona. She thought she was a millionaire. What happened was I got called by my oldest son, and he said, Dad, I need a favor. My best friend's brother died 3 weeks ago, and his wife just got the check, and it's a big check, and she wants to meet with you on Saturday. I said, Ryan, what did you want to meet with me for? I don't do any more personal production. Right. And he said, well, that's why she wants to meet with you, because you know this stuff, and you're not going to try to sell her anything. Right. Well, I'd been gone for 13 days. I was leaving for 6 days, so I have 1 day out of a 20-day stretch off. I said, I'm not driving around the valley looking for somebody who wants to talk to me on my 1 day off out of 20 days, but I said, if they want to come to my house, I'll meet with them at 9 a.m. Well, the dad, the brother, and the widow came to my house. She was 42 years of age, 2 little girls, husband killed unexpectedly, a $1 million death claim. After I gave her my condolences, she said these words to me. She said, Tom, I never thought I'd be a millionaire. Now here's what I want to do.
You're not.
I want to build a custom house on a lake with a place for my daughters to play. I don't want a cookie cutter house. And I had to stop her mid-sentence and say, ma'am, time out. There's no custom houses. You only have $1 million. In a 1% interest rate environment, that's $10,000 a year.
Right.
I'm here to see how you guys can possibly survive on $10,000 a year. Now, maybe you can get $20,000, $30,000, $35,000, but 4% fails, especially this has to last for 50 years. So I said, max, and this is pushing it, you're a $38,000 a year woman. You're not a millionaire. Right. Well, she was shocked. We can't live on $38,000. My husband made $250,000 a year. Well, somebody who's making $250,000 a year should have $5 million. So what I'm trying to say is that even the average person out there is so far underinsured that you can write whale-like policies if you really understand how far underinsured
Explain
they are.
the math to them.
Yeah, and so
and it's simply that $1 million or that death benefit invested needs to generate enough income from the interest to fund your lifestyle.
Yeah.
Correct?
The other thing that you can do is you can show them how life insurance allows them to have a better retirement and spend more money. See, I use me as an example all the time because I own everything. I own 11 annuities. I have millions of dollars of cash value in permanent life insurance. So I use me as an example. We got 4 kids. One day we're sitting around, we're saying, hey, how much should we leave the kids? My wife said, I don't know. What do you think? I said, well, if we bought a $1 million second to die policy, name the 4 kids a beneficiary, when we're both gone, they get $1 million tax-free. That's $250,000 a piece tax-free. I said, let's start there. So we bought a $1 million second to die life insurance policy, name the 4 kids a beneficiary. That policy is completely paid up. Total cost of that $1 million policy was $150,000. So now think about that. For 15 cents on the dollar, we transfer $1 million tax-free to our kids. So why wouldn't you sit down with somebody who's got 10 million or 20 million or 50 million and say, hey, for 15 or 20 cents on the dollar, you can leave that money to your kids. Now spend all the rest of it. Go on and travel. I tell people 2 things. Number 1, you're not getting any younger. Number 2, you don't get to take any of it with you. And if you really think on that, you're not getting any younger. You don't get to take any of it with you. What you really want to do is you really want to spend your money and leave life insurance to the kids for pennies on the dollar. Right. But people are doing everything wrong. They're trying to spend their money, or they're not spending their money. They're saving their money to leave it to their kids. And then they don't have an optimal retirement. The kids don't get as much as they could have if they would have used life insurance. It's a lose, lose, lose. So we've really got to reset their mindset. Just ordinary people, not just whales. I mean, you can do that with whales too. But I mean, just show them the leverage that life insurance has and how they can use it for their advantage. See, the reason they don't buy permanent life insurance is they don't want you to make a big commission. They've heard, oh, you get a big commission. It's not about your commission. It's about them getting the most for the least. But we got to use words like that, and most people don't.
And I was going to bring this up, and I'm so happy you have these 4 figurines here. And those of you that are listening on the podcast, go to our YouTube. We're going to have a video of this. But talk about the 4-cow strategy.
Yeah, so this is a story. It's in my book, Paychecks and Playchecks, and it's a true story. I got called in on an appointment to Sterling, Colorado with a ranch who was worth $15 million. And the advisor at the time was recommending $7 million of whole life insurance to pay for the estate taxes at that time. Now, we all know the estate taxes changed completely, but I tell people you need to know estate tax will change completely again, because if this election swings a different way, all those estate tax benefits are going to go away. So it's a concept sale. But this guy was worth $15 million. The agent was recommending $7 million of permanent life insurance. Now, I always tell people, I don't know how many $7 million case you've been on, or $20 million or $50 million of permanent life insurance. I've been on dozens of those cases, and they all go down the same way. And it kind of looks like this. What do you mean life insurance? No, they're not going to be in life insurance here. Didn't you do your homework before you came in here? I'm worth $15 million. In fact, I can tell you one thing. If I had one more penny to my name, the last place I ever put that penny would be life insurance. There'll be no life insurance here today. Well, that's the way they all go. Right. So you better get used to it. You want to work with whales? Every whale is going to say that to you. So now what do? Well, what I do is I go get up, I sit down right next to the guy. And I say, sir, I got to get on your side of the table on this one. I completely agree. You've done a great job. You're worth $15 million. You don't need any life insurance whatsoever in the traditional sense of life insurance. But you need a way to transfer your $15 million to your children and grandchildren in the most tax-efficient manner possible. Now, if we could do that with stocks or bonds or real estate, we would. But we can't. It just so happens life insurance can be transferred income and estate tax-free if you set it up properly. Well, that works about 60% of the time. On this appointment, we're just like this. He said, well, I don't know if you thought I was born that night, but it wasn't last night. And there's going to be no life insurance here today. And there's the door right there. You can head it right on out. And I'm not making it up. The agent pulls out 4 plastic cows from like a kid's farm set, sets them on the table. He said, Mr. Rancher, these are your 4 cash cows. This one represents all your land. This one represents all your buildings. This one represents all your farm equipment. And this one represents all your investments. Now, what Tom was trying to say is if we don't do something, when you die, the IRS is going to come in and they're going to butcher 2 of them there cows. They're going to keep the meat. Now, he said, I heard it a little different. What I heard Tom say is that we ought to get down and take a little milk out of each of them there 4 cows. Now, with this bucket of milk, we're going to buy ourselves a life insurance policy. Now, when you die, the life insurance policy goes to the IRS, but your family gets to keep all 4 of your cash cows. Now, one of those 2 things is going to happen. You get to pick which one. And it was like a light bulb went on in this guy's head. He said, well, heck, every rancher knows it's better to give up a little milk than to butcher 2 good cows. Now, what's my point? My point is I couldn't explain estate planning to him. The attorney couldn't explain. The accountant couldn't explain. You put 4 plastic cows in front of the guy, turns into an estate planning genius. So here's what I learned that day. Number one, keep your message simple. Number two, speak their language. See, if you're working with a trucking VIP or something, then you get 4 Tonka trucks on your desk. You're going to take a little gas like you should 4 Tonka trucks. If you're with a real estate tycoon, you put 4 apartment buildings on your desk. You're going to take a little rent out of each of the 4 apartment buildings to pay for the policy. So it's just keep it simple, speak their language.
That is the most.
And now we've got these cash cows at Tom
I
Hegna.com.
want to just end the podcast right now. That was amazing.
Yeah.
And that guy that you're riding with that day was one hell of a financial services sales guy.
Yeah.
So here's my question. Guys, I need you to know this. We're sitting in a small conference room, probably 15 feet one way, 10 feet another. Right outside the door here, there are 3,000 people that are here partly to hear you speak and talk to them.
I spoke yesterday and I just got off the stage just a few minutes ago.
So 3,000 people. So of those 3,000 people, what mistakes are they making that you just see over and over again that you're like, guys, come on. Charlie Brown kicking the football here.
So many advisors just don't even know the basics. They don't even know their own products. They don't know how to ask questions. Let
me stop you right there. When you say don't know their products, are you saying contractually speaking, they never pick up the policy and read it verbatim to see what
they do not read the details.
Right.
And so they go to some, maybe there's a wholesaler that has a luncheon and does this and this, and they pick it up and then they think it does things it doesn't do. So like I always tell people, you got to know your stuff.
Yeah.
Like you got to know it inside and out. I was the guy that would always get the prospectus and go through it with a yellow highlighter just for me, not for a client. But I what's this? What's this? What does this mean? What's that fee? Right. What's this? And I knew it inside and out. So if anybody came up to me, I knew my stuff cold. And then I say you got to know your best competitors' products better than they know it. Because when I was brand new agent. I was with MetLife at the time. And brand new agents, they work mortgage leads, they sell term insurance. I was the same, and so I'm out there. And I was getting my clock cleaned by New York Life at the time, and I ended up working for New York Life. But this was before. And the reason was they had a lower first-year premium. Our premium was cheaper over 5 years, 10 years, 15 years, but theirs was cheaper the first year. Well, what do people do? They shop the first-year premium. And they were buying that product. And once I found out we were cheaper 5 years, 10 years, I never lost another case. But I had to not only know my product, I had to know my competitor's product. And I'm telling you, a lot of advisors don't know that. Another thing that they don't do is they don't ask enough questions. They start saying, this does this, it does this, it slices, it dices, it does. No. Ask questions. Telling is not selling. It's not about you. Yeah. It's about them. Ask about them. What's important to them? What do they need? And 2 very powerful questions if you're working with whales. What do you want your money to do while you're alive? And what do you want it to do when you die? If they can answer those 2 questions, I can help almost anybody put the optimal solution together.
What do you think about life insurance as an accumulation vehicle?
Okay, so I'm even published in Forbes magazine saying this. It's a great bond substitute. See, the people who say, well, life insurance is a lousy investment. It's not meant to compete with stocks. I mean, a variable life policy could theoretically compete with stocks, but not a whole life and not a IUL even. It's a bond substitute. So if a person has 60% of their money in stock and 40% of money in bonds, you could go to the biggest whale out there. If you got 40% of their portfolio, I promise you, if you got 40% of Elon Musk's portfolio, you'd be a happy person. And just move the bonds into permanent life insurance. They get a bond-like return, but they don't have the interest rate risk of a bond. Right now, bonds are paying 1 or 2% of the upside, but if interest rates rose, those same bonds could fall 30, 40, 50, 60%. So bonds are not a good place to put your money right now. Younger people should put their bond portfolio in permanent life insurance. Older people could do it a lifetime income annuity where the annuity functions like a AAA rated bond with a CCC rated yield with 0 standard deviation. So those would be things you could take out to the whale market all day long. Just get their bond portfolio. Don't worry about their stocks right now.
So I had a question I wanted to ask you that I thought about on the way over here. It's been a few years since I heard you myself speak. I believe it was in Nashville or Chattanooga. You came in for a seminar and we talked about paychecks to paychecks. Now, it's been a few years since you've written that book.
Yep.
Has anything changed in terms of your mindset or anything you put in the book that now you're like, well, I feel a little differently about that now?
Well, I mean, of course, there's been some changes in Social Security, filing suspend, and some of that stuff. Right. The RMD is now 72 versus 70 and a half, but the concepts have not changed, okay? And the 4 simple steps of paychecks and paychecks. Step number 1, cover your basic expenses with guaranteed lifetime income. Has not changed. Step number 2, optimize the rest of your portfolio to protect yourself against inflation. Has not changed. Step number 3, you must have a plan for long-term care. Has not changed. Step number 4, the most efficient way to pass wealth is with life insurance. Right. Those have not changed. So details about Social Security has changed, but...
Well, you even talked about that in the seminar I was in. You were like, I think your words were something like, at some point they're going to have to fix Social Security, whether it's, extend.
Oh, yeah. They're going to have to raise the retirement age.
Right,
they're going to have to probably raise the tax level. They're probably going to, they're going to have to do more changes. Of course they will. But the base concepts haven't changed. So it's like the Secure Act just came out, and there's all this stuff in the Secure Act. I just did a video that said the Secure Act is not going to change my life one bit. Right. It's great that annuities can be now put in 401ks, but almost no 401ks have them. Mm-hmm. We can argue whether it's good to raise RMD to 72 from 70 and a half. I tell people they should spend the money. They shouldn't. The worst money you can leave your kids is IRA money and 401k money. Mm-hmm. So you're supposed to spend it. So I don't know, raising that is that great of a deal. They took away the stretch IRA. That's kind of a negative in the deal, but none of it changes what I do. My lane is helping people retire the optimal way, and none of that has changed.
So on that note, we had dinner with a buddy who was at the New York Life Convention the other night. He's a 8-year MDRT winner.
Mm-hmm. Knows his stuff
better than anybody I've ever met, especially in our market. And he just happened to be out here at the same time as we were. Yeah. And he was telling us at dinner that he ran across a case where someone had a client with another company putting money, large sum of money per month for years into a life insurance policy. And I don't remember the details, but it was not structured the right way, and the person was in a really, really, really bad spot. Now, obviously knowing your product to prevent that from happening, but what can agents look for and what can customers look for to prevent something like that from happening?
Well, I don't know anything about the case whatsoever, but I would say almost certainly it was a UL policy, Universal Life.
I think so.
Because that's where you have problems. If a universal life policy is not funded properly, you can't just fund a UL. You have to overfund a UL for it to really do its magic. And that's why net, I personally prefer whole life because it's been through all the cycles. I know IUL is a hot product right now. VUL used to be the hot product. VUL, if you look at it, if people actually did VUL and kept it, it's done great because the market's at all-time record. So it's been a great product. Right. IUL so far has done pretty well, but we haven't seen it through a real depression, recession, and so we don't know. But with universal life, you have to overfund it. If you overfund it, I think IUL is fine. I think VUL is fine. I think UL is fine. But a lot of them are not funded properly, and they can get into big problems.
I believe on this case, he said on the top of the deck page in big red letters, it said, at the year, and it was like when the client was going to be 67 years old, which was right around the time he might need it. And in big red letters, it said that this year, this policy will turn into a
ART, or was it a modified endowment?
Something. Maybe. It was going to go over the MEG?
Whatever
it could have been.
And it was just.
Well, then it sounds like it's not underfunded. It might be overfunded. I don't know. But I'm just saying my experience is the problems come in with underfunded UL products. That's a big problem.
So as a client, just really look at that illustration and make sure that
every illustration is just numbers. Not a single illustration in the history of America has ever turned out exactly the way they illustrated. Not one. So it's either going to be more or less, but it's never going to be that number. So, and I don't think most people know that. I don't think most advisors know that. But
so, couple of things, and I know the last time we talked, we asked this same question. 2 or 3 things that our P&C agents that listen to this, and we have a lot of life and health guys listen to this as well. They can turn off the podcast today. They can go back and implement.
Well, a couple ways to transition from P&C to life. So first of all, if you're doing homeowners insurance, I think it's a very easy transition to go to mortgage protection. So that's an easy transition. But it's harder if you're doing auto or boat or excess liability, then go talk to life insurance. So one of the techniques I would use, because a lot of people don't know this, when I was at MetLife, I was the number 5 P&C producer in the country. So I wrote a lot of P&C. But I take out my keychain and I say, what's on your keychain? Well, we got your house key. Hey, we got your house covered. Right. We got a full replacement policy. Your house burns down, we get a full replacement policy. Oh, we got your car key. You total your car. Guess what? We get you a new car. We got your boat key. You sink that boat to the bottom of the lake. We're going to get you a new boat. And then I drop the keys. Bam. What about you? We need a full replacement policy on you. We got this little thing. It's nowhere near. That worked very well for me to transition from P&C to life. But then another way, and you probably heard this one before, but it's more of an insurance riddle, and it doesn't work with everybody, but it worked with my personality. I'd lean back in my chair and I'd say, I got an insurance riddle for you. If you own the golden goose that laid the golden eggs, but you could only insure one, which would you insure, the eggs or the goose? And they all say the goose. And I say, yeah, that's you. You're the goose.
That's right.
We got all your eggs insured. We got to insure you. Right. And so those are just some ways to transition. And then just understand how underinsured every one of their auto and policy holders is. I told you they need at least $1 million for every $50,000 of income. So just start saying, our firm professionally recommends you carry at least $1 million of life insurance for every $50,000. And when they say, well, that sounds a little high to me, you tell them the story of the widow in Arizona who thought she was a millionaire, is now stuck living a $38,000 a year life with her girls. And here's some other language that works. You know, when people want term insurance, term is cheap for a reason. They're supposed to buy a bunch of it. You're supposed to sell a bunch of it. So just use these words. We sell term in units. 1 million, 2 million, 5 million. How many units would you like? Maybe I can squeeze a half a unit on the underwriter. I don't like to, but we sell it in units. 1 million, 2 million, 5 million. You just use those words. You're going to sell bigger policies. Stop illustrating term under $1 million. Maybe you'll sell it under $1 million, but never illustrate it under $1 million. It's cheap. Show big numbers. They need big coverage. That would help your P&C producer.
Had a really good life financial services guy out of Atlanta tell me one time, he said, do you want to sell $1 million worth of life insurance? I said, man, yeah, I'd love to. He said, how much life insurance do you have, Scott? And I was like,
$150,000.
He's like, the first thing you need to do, go back to your office, write yourself $1 million life insurance policy.
Yeah. And million's nowhere enough.
Right.
I've got about, I don't know, 8 or 10 million of permanent life insurance, you know?
And I've got mine as well. I mean, she we'll leave here and she'll be like, oh, when you get home, that happens.
Need to re-up.
But yeah, he told me that. He said,
then she'll take you to Grand Canyon and say, oh, whoops, Scott,
exactly,
hey, it was so great. No, it was really slippery right there.
Yes, it was. Well, I want to respect your time because I know you got people out there wanting to talk to you and sign books and all that good stuff. I know that.
We just really appreciate it. I think we've really hit the nail on the head here with what we were looking for. So for our audience.
I can't tell you how much I appreciate you being on the show. I really do. And
thanks. We'll do another one sometime.
I would love to. Yeah. I need to just follow you around the country and listen to you. Maybe one day it'll all sink in and I'll start selling.
Well, you know, my stuff, it works. It really doesn't. So here'd be something if your listeners wanted to do something. I just did a webinar and it's free. They can go to tomhegna.com/webinar.
Okay.
They can watch it whenever they want. It runs pretty much 7 days a week. And I will share with them words, language, questions, and stories that they can use with their clients. So that's a free webinar. I don't know why they wouldn't want to do it, and I can help them.
On that note, what are some good conversation starters? Let's say you're out here at the middle bar here at this hotel. Obviously, a lot of sales aren't quick, but what are some things you can say to maybe get someone's attention to start having a conversation?
Well, you know, people would say, well, what do you do for a living? I say, I create multimillionaires. You tell me how many million you want, I'll tell you exactly what you got to do it. People go, really? Yeah. You tell me how much money you want at what day, and you can plug that in. You can solve a policy to do that. Yeah. And I just say, how many million you want? You want 2 million, 3 million, 5 million? I just help create multimillionaires. And that gets their attention. You got to remember, people are motivated by two emotions, fear or greed. And you kind of got to figure that out early in the conversation. If they come in, they say, oh, man, my broker's got me in the best stocks. Oh, I bought Tesla when it was $25. It hit $900 the other day. They're motivated by greed. And if people say, oh, man, do you see the State of Union? Oh, this country's going to you-know-where and a you-know-what and blah, 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 blah. They're motivated by fear. If they're motivated by fear, you got to talk about the guarantees. You got to talk about financial strength. If they're motivated by greed, you got to show them all the things that you can do to build their wealth, bond substitute, and build wealth. So you kind of got to learn early, what are they motivated by, fear or greed? And then that can help you shape the conversation. Ask more questions. Yeah. And if you want to sell life insurance, a book I recommend all mine, of course, but Man on a Mission by Marv Feldman is loaded with great life insurance questions. And I think if advisors would work on their questions rather than studying product knowledge, now you got to know your product. We just said you do. But asking the right questions, you can always look up the product knowledge. You can always call the wholesaler to figure it out. But you got to ask more questions to dig deeper into what they're doing.
That would be my advice for somebody starting out in the life and financial services side, is to read 2 or 3 of the books. His books, Man on a Mission.
Yeah.
I mean, I could just see that being so valuable to somebody starting out to really learn.
What are your thoughts? So we were talking out in the lobby out here on how long, and obviously every situation's different, and you may want to tailor this to the client some, as you said, greed, fear, but the length of the sales cycle. Do you think that financial advisors and insurance agents sometimes take too much time to make that sale? Are there times you should go for that quick hit? Are there times you should drag it out? I was given an example of I was trying to buy a 529 plan. I went to the guy's office to buy it. Oh, no, we're not doing that today. And I'm just like, oh, my God, I just want to buy a 529 plan. And what are your thoughts on that?
Well, every advisor is different.
Yes.
Even through my career, I did it different. I mean, there was time when I do it to appointment close, fact finding and close. And then when I got pretty good at doing it, I could just do it all in one appointment. But now, especially if you're working the whale market, that's not a 1 or 2 appointment close. I mean, you got to have a process.
Right.
There's a difference if you're just selling a product. If you're just there to sell an annuity, sell a life insurance policy, that could be pretty quick. But if you really want to do holistic planning and know where this fits, you got to know the whole deal. You got to know what they're doing with all their stuff. Otherwise, you might recommend something that totally contradicts something else in their plan. So the bigger the case, the longer the timeline. The smaller the case, probably the shorter the timeline. In general, there's always exceptions to any of those rules.
Cool. That's my questions, man.
Man, Tom, I just cannot believe that we're here sitting with you right now. I'm blown away, but I just want to thank you again.
You bet. We'll do it again.
Absolutely.
I always enjoy spending time with you. And I have to be completely honest with you. Our podcast has taken off tremendously.
Very good.
You were the first one that got it there.
Yeah.
When we had you on that podcast, it was like rocket fuel.
Well, good.
It went straight up in there. And when people see, I guarantee you, when people see this, his name in the title, and it's like...
And the reason we are both here together is because a convention paid us to come here and do a podcast on stage.
There you go.
Yeah. And all of that wouldn't have happened.
Awesome.
Those first 10 guests we had, you included, were all instrumental in that taking off.
Yeah. Yes. We owe you a debt. We have a debt of gratitude.
Well, I'm going to give you guys these 4 cash cows. How's that? You can take that with you.
And between you and our buddy Van Miller, y'all are the 2 most listened to YouTube. We're everywhere, but on YouTube, y'all are the 2 most listened to.
Well, Van and I are great friends, and we both recommend each other to other organizations because we both believe in very similar things. We have different styles, which makes it interesting because you don't always want to have the same guy. You want to have different angles coming in from different directions, but his stuff is solid.
I'll tell you a funny Van story, then we'll let you go. So we did a podcast with Van, and Van and I kind of hit it off, and we talked afterwards, and we still talk some today. And he called me the afternoon after we recorded our podcast, and he said, "Hey man, I have a question." He said, "If I want to listen to this podcast, how do I do that?" And podcast is interesting because if you have an iPhone, you're listening to that on a different platform than you are on an Android. And I said, "Well, Van, do you have an iPhone or an Android?" He said, "I don't know. Let me look." Hang on. Like, oh my gosh, this guy's so enthralled in his work. He doesn't even know what kind of cell phone he has. Like, I respect that so much.
Absolutely. Well, guys, I'm going to close this thing out. Listen to me. If you want another revenue stream in your PNC agency, this is a fantastic opportunity for you guys. I know a lot of independent agents don't have a life and financial services side to their business. Guys like Tom Hegna can help you. Listen to them. Buy his books. He is the guy in the retirement income space. And I hope that each one of you will go to his website and find some place in the United States of America to go see him speak because he does a fantastic job. We love you. We appreciate you being on the show. And as I say after every episode, get your ass out from behind that desk today and go out in the big bad world and go make money for your family, for your wife, for your kids, for your mom and dad that are struggling out there. Get your ass out from behind that desk today and go out and sell something to make money for your family. Write good business for the companies that you represent and write good business for the agencies that you represent. Bradley Flowers, I love you.
Thanks, man. Thanks, Tom.
Yep. Thank you.
Guys, you are listening to the Insurance Guys podcast, and we'll see you back here real soon. Take care.
Thanks for listening to the Insurance Guys podcast. If you need to know more about me or you need to get in touch with Scott, you can always reach me at theinsuranceguyonline.com. or email me at iprotectins@gmail.com. And if you need to get in touch with Mr. Bradley Flowers, go to bradleyflowersinsurance.com or email him at bradley@saralandinsurance.com. Guys, we love you. Thank you so much for listening. We look forward to being with you again real soon on the next episode of The Insurance Guys. Take care.